All right, joining me is Zach Pandl, head of research at Grayscale, who everybody knows they're a leading crypto asset manager that really pioneered the entire crypto investment product category. And as we sit here today, they now offer some 35 products in all, over $16 billion in assets. That includes 17 ETFs led by the Grayscale Bitcoin Trust ETF, ticker GBTC, and the Grayscale Bitcoin Mini Trust ETF, ticker BTC, fantastic ticker. And Zach, as you can gather from his title, he heads up all of Grayscale's crypto market research and analysis and commentary. And he's somebody I always enjoy visiting with. And so, Zach, great having you back on the podcast.
Great to be back, Nate. A happy summer. Looking forward to this conversation.
All right, I am too, and we're going to jump around on several different topics, but I think we have to start with this huge story over the past couple of weeks, which is the Coldcard hack. And I think most people who listen to this podcast are familiar with what happened, but essentially there was a flaw in the Coldcard Bitcoin storage devices and how they generated wallet seeds. And that made it much easier for hackers to reconstruct those seeds and access people's private keys and, unfortunately, steal their Bitcoin. And I think for both of us, Zach, me as somebody who, as you know, I cover the ETF space very closely. You're obviously at an asset manager who offers ETFs. The fact is, this has sparked a lot of discussion around how this situation might actually benefit ETFs. And really, I think it sparked a broader discussion around Bitcoin custody in general. And so I guess let me start with this. When Grayscale has conversations with clients or potential clients about your Bitcoin ETFs, how much of that conversation centers around custody? Like if you're talking to a client who is debating whether to buy Bitcoin direct or buy an ETF, where does custody typically fall in terms of importance?
Well, I would say it very often comes up, Nate, but it is very infrequently the reason why an investor doesn't allocate to the products. As you know, custody is really foundational in asset management, whether it's Bitcoin or stocks or bonds. And so any serious investor that's doing their due diligence on the Bitcoin ETFs, on our Ethereum ETFs, they're very likely to ask about custody. But we don't find it to be a major hurdle. Once we have described the rigorous institutional custody that Grayscale uses for its Bitcoin ETFs, the vast majority of investors are pretty satisfied with that answer, and they move on to the long list of other questions that they have, which is portfolio construction, maybe the 4-year cycle, maybe quantum computing. So there's so many questions that investors have before they make a Bitcoin allocation. Custody is definitely one of those questions. I would say it does come up very often, but it almost never is the reason that holds back an investment into Bitcoin. So the institutional custody used by the Grayscale Bitcoin ETFs, by the ETFs that are available out in the marketplace today, I think are enough, rigorous enough and secure enough that the vast majority of investors are comfortable making an allocation.
Okay, so then let me ask you this. Let's say you do get some questions regarding custody. How do you like to lay out the pros and cons of the various ways people can gain Bitcoin exposure? Because you have self-custody as one option. You have using a third-party exchange like Coinbase, or even now somewhere like Charles Schwab, that's another option. Or you can buy an ETF like BTC. So how should somebody think about this? What are the primary considerations here?
Yeah, let's go through all the categories. Starting with the ETF. Look, I think the ETFs are the easy button for crypto investing for the vast majority of people out there. And for me, they're my preferred choice. I personally do not hold a lot of high dollar value assets in self custody, whether Bitcoin or elsewhere in crypto, and prefer to use the ETFs for my own assets as well. And the reason these are so popular is really they package together and solve all the questions that an investor needs to solve when they're making a crypto allocation into a single instrument. So there's lots of different ways to go about investing in Bitcoin. But if you go your own way, you need to make some judgments about custody, about where you're accessing that liquidity. So where are we going to get these assets, and what am I going to be charged for them on the exchange, for example? How am I going to do my taxes? Can I bring these assets into traditional investment accounts, brokerage accounts, and IRAs? In the case of proof of stake networks, how am I going to stake my assets? So there's no wrong way to go about making these allocations, but you need to answer all of those types of questions when investing in crypto. And the ETF's really the easy button because they answer all of those things for you in a single package. Can go in any type of brokerage or retirement account. They stake in the context of proof of stake networks. And of course, they use institutional liquidity and custody. Your taxes are done in exactly the same way as all your other ETFs. So a very straightforward instrument, and that's why they are so popular, as you know, Nate, with investors. And I personally think we're just getting started in the adoption of the crypto ETFs. I'm sure the topic will come back later in the conversation. What about the other options? So self-custody does have certain advantages. Number one being the self-sovereignty principles of Bitcoin. I would say of digital assets in general. One of the core breakthroughs of public blockchain technology is that it facilitates true digital ownership. Prior to public blockchains, we really didn't have digital ownership. You may have, say, some music that you downloaded or something, but you don't really own that. It's just a record in someone else's database, an institutional database. Public blockchains are the first tool that allows us to have true digital ownership. That's one of the reasons that it's such an important technological breakthrough. Some people say the value layer of the internet. So to get full use out of that technology, you need to have the ability, at least, to self-custody. And there's many investors that prefer to hold their assets in that way, just like there are many investors in gold that prefer not to use the ETF or not to use centralized custody, but they want to hold those gold bars or coins in their own possession. So that's one core reason that you use self-custody, is for that true self-sovereign digital ownership aspect of Bitcoin or public blockchain technology. The other thing that you get out of self-custody is functional use of the assets, of course. If you want to use Bitcoin to make payments, either in the layer one or in the Lightning Network, you need to have those in some kind of self-custody form. You can't obviously use a Bitcoin ETF to make payments. I try to make Bitcoin Lightning payments whenever possible, so I hold a small amount of Bitcoin in the Lightning Network for exactly that purpose. So self-sovereignty, functional use of the network, these are the reasons that you want to use some other type of custody model. And then lastly, holding assets on an exchange can be a use in some cases. I think really two categories of users. One is people that are just getting started. Young people that maybe don't have many assets in a traditional brokerage account or have IRAs, like people that have been working for a long period of time. They're just learning, just getting started with crypto. Holding assets on an exchange for small dollar value maybe is fine. And then at the other end of the spectrum, professional traders that maybe have a prime brokerage relationship with an exchange. Maybe they're doing multiple leg trades. Maybe they're using derivatives. They need to use solutions like portfolio margining. That can be a reason to use assets on an exchange. So these are all the sort of menu of choices: the ETFs, self-custody, holding assets on an exchange. And in my view, there's no wrong way to go about it. There are different solutions for different types of people. But of course, working at Grayscale, one of the things that we believe strongly is that the ETFs are a great solution for so many people because they package all of these questions and solve all of these questions for investors in a single instrument.
All right, so that was an absolutely fantastic overview, but now there's several threads I want to pull, so bear with me. And you mentioned a couple of times the institutional grade custody involved with the ETFs. And Zach, I know you probably get this question a lot, but one potential risk you'll hear is that this creates a single point of failure. Or if the issuer is using multiple custodians, maybe there are 2 or 3 potential points of failure. And obviously, nothing is 100% foolproof. We both know that. But can you talk a little bit more about the security of the underlying Bitcoin in an ETF like BTC? Because again, I know you see this out on X where people will say, well, Coinbase can be hacked, and if that happens, the ETF could go to 0 or whatever.
Yeah, it's a great question, Nate. I would characterize the ETFs as using rigorous institutional custody with many layers of security, and I don't consider it single point of failure risk at all. First off, assets are held in segregated cold storage wallets, except for the assets that are in flight in order to meet the creation and redemption needs for the ETFs on a daily basis. And those assets are swept multiple times a day. On top of that, you have things like SOC attestations, meaning a third party auditor has gone and reviewed the custodian's practices. You have a layer of insurance involved with the custody assets. And as part of Grayscale's best practices for managing our Bitcoin ETFs and our Ethereum ETFs, we have introduced additional custodians beyond the primary custodian in some cases. So we're using a couple of different service providers as part of our best practice for these products. So multiple layers of security, I think quite a different structure than the single signature, single point of failure risk that you have with these cold storage wallets. When you have segregated cold storage, multi-signature, SOC attestations, and insurance, I think there's quite a lot of layers, and that's what our investors tell us as well. They see these rigorous practices, and really custody does not become a reason to hold back an investment in Bitcoin. Again, investors may have lots of other things that they want to ask about when deciding to make a Bitcoin investment, but generally custody practice are not a lasting concern.
Okay, so those are the spot ETFs. Let me come back to self-custody. And you made some good points on why somebody may want to self-custody Bitcoin. But, as I've thought about this over the past week or week and a half since the original Coldcard hack, do you think this is still too complicated for the average person? Like, I'm just thinking of somebody who they want to self-custody Bitcoin. They hear about this Coldcard hack. And then they're seeing people, again, out on X or wherever talking about rolling dice and entropy and stamping seed phrases into a steel plate, sharding keys. Like, should this be easier? And to be clear, I'm not saying it's rocket science to do any of this, but, could I get my mom to do it? I'm not sure. And she's a pretty smart person.
So here's what I would say, Nate. The security practices, the risk management that you're using for your assets should be calibrated to the value at risk. So self-custody is actually fairly straightforward. For small dollar values, you don't need to use all of these types of tools. There's many types of simple tools that can be used to have some self-custody Bitcoin for the purpose of making payments or using the Lightning Network or for other purposes. Of course, if you are self-custodying a very high dollar value of assets relative to your net worth, you're going to use a lot more rigorous principles. And I think that there does become a point where the amount of assets at risk warrants considering institutional custody of some kind, or at least a multi-sig setup. So I would not want to discourage people from trying self-custody. One of the reasons that we love public blockchain technology, again, is the self-sovereignty, the digital ownership that it provides. Bitcoin is a relatively simple network, but certainly when you move to things like Ethereum and Solana, there's a lot to do there, a lot of things that we want to do on the network. And those can't be achieved through an ETF. And so it's important for people to understand how the wallet infrastructure works. And I think most of these tools are relatively straightforward. So I would encourage investors, users of crypto assets, to think about how much value they have at risk. If it's a relatively modest amount, then it's perfectly okay to use a self-custody setup of various kinds. As that value is increasing, think about custody diversification, maybe moving that into an ETF structure or some of the other multi-signature and partially institutional structures to protect your assets. And I think that that's the same type of logic that you would apply for any type of asset that you can hold on your own. Physical gold, for example, maybe a small amount of physical gold is okay in self-custody, but if you're holding the large amount of your wealth in that asset, maybe you should have an institutional partner. So I don't want to discourage people from trying self-custody, from using these networks. They're such an important part of what crypto is all about. And I think, again, for small dollar value, some of these tools are quite easy for the average person to understand.
I think that's extremely well said. And I always say, the best way to learn about the underlying ecosystem is by doing. And so at a minimum, if you have a small amount of Bitcoin, understand how to self-custody it. I think it really helps the light bulbs go off around, why there's value here. Okay, so I don't want to put words in your mouth, but I'm assuming obviously Grayscale would love to see more people buying BTC and GBTC to gain Bitcoin exposure. But I would also say, I think we need a healthy underlying Bitcoin ecosystem, right? Like if hypothetically, Zach, everybody owns Bitcoin using ETFs, that's a problem for Bitcoin. And so I'm curious, again, in light of this Coldcard hack, and maybe this will be a boost to ETFs, how do you think about sort of this balance between having a healthy underlying Bitcoin ecosystem, but also the growing popularity of ETFs? And maybe as people do accumulate more Bitcoin and they look for institutional options, they look to the ETF. Is there a certain balance that needs to be in place there?
I think that there does need to be that balance. I don't know what the exact number is, Nate, whether a certain amount of self-custody is required for healthy functioning of the network, but I think some is absolutely required. If Bitcoin is just entirely in institutional custody or held through these types of instruments, I think something about the network is lost. Of course, again, we are very enthusiastic about the Bitcoin ETFs, and I think they will continue to grow as a share of Bitcoin. The ETFs today hold about 6% of Bitcoin market cap. I think that number can keep growing over time. But we do want to make sure that there is a thriving Bitcoin ecosystem. I would like to see a broader use of Bitcoin beyond just a store of value and digital gold like asset. I would love to see Bitcoin used for payments. I would love to see more use of the Lightning Network. Even things like ordinals, which are kind of NFT on Bitcoin, I think are something interesting. And you have to have the ability to have self-custody wallets in order to see all of that come to life. I would also underscore that Bitcoin is a global asset. The ETFs today are a great tool for a US-based investor, US brokerage accounts or IRAs looking to get exposure to Bitcoin. But one of the benefits of this technology is that it's used by probably someone in every single country on planet Earth to hold their assets and to exchange their assets in digital form without an intermediary. We have to have sensible self-custody solutions for those users. And so absolutely there is a balance. The ETFs can continue to grow, but we must protect the importance of self-custody for Bitcoin to continue to function and grow and evolve and thrive in the longer run.
All right, before we move on, just to put a bow on this Coldcard situation, what type of impact do you think this will ultimately have on ETFs? And I'm not looking for a number. Is it the obvious answer, clearly positive? I mean, we looked last week, there were something like $850 million in inflows into spot Bitcoin ETFs, obviously immediately following the Coldcard hack. And I'm not saying that's directly related. As you know, there's a lot of factors that can impact flows, but I guess any final comments here on the situation?
Well, I did want to say that our heart absolutely goes out to the victims of this hack, and we hope that they're able to recover some of the funds. A lot of great advice going around on X and other platforms, giving people guidance on best practices in order to have the best chance of recovering some of these funds in the future. So, I think we are Bitcoiners too at Grayscale, and we feel terrible for what all these users have experienced. Hopefully, there is some kind of a resolution down the road. That being said, I do think that the ETFs and the custody, the institutional custody that they provide is increasingly valuable when you see these types of incidents. And we have seen an increase in interest in the ETFs in the wake of the Coldcard hack, particularly interest in-kind creations into the ETFs. So one of the cool features of these products is that they can take Bitcoin in kind from investors, and investors can retain their cost basis and get a share in the ETFs in a brokerage account, move into institutional custody in that way without having a tax consequence. Now, there are minimums involved, so not available to every investor, but that in-kind creation interest is picking up, and I think that is something that will continue. And really, that's the ultimate endorsement of the ETFs and the custody that they're using, is when Bitcoiners are seeing them as a secure way to hold their Bitcoin for the long run, that's a great endorsement. So certainly, we're here to provide those tools to Bitcoiners. We would love to see a rigorous self-custody community continue to thrive, and our heart goes out to the victims of the hack. For those investors that would like to move into the security of the ETFs, Grayscale is obviously here to help.
Again, I think very well said, and I'll echo your sentiments. I mean, certainly my heart goes out to everybody impacted by that hack. These were people who truly thought they were doing the right thing and following, every protocol correctly. And so you hate to see something like that happen. Okay, let's move on to a few other topics here. And I guess first, since you and I last spoke, Grayscale has launched several more spot crypto ETFs, including a hyperliquid ETF, ticker HYPG, which is good, HYPG. That's already over $100 million in assets. It just launched in June. I guess maybe talk a little bit more about that one in terms of some of the conversations you're having around hyperliquid and perhaps the basic investment case here, which, as you know, hyperliquid has been a relative bright spot during a pretty tough time for crypto overall. So talk more about that.
Yeah, a bunch of things to say on this topic. The first is, this really speaks to the diversity of the crypto asset class. I mean, how different are these two investment concepts? Bitcoin, a kind of digital gold-like asset held by investors looking for diversification and protection against fiat currency risks in a diversified portfolio. And then hyperliquid, a kind of fintech asset, a platform specializing in a new type of derivative product, perpetual futures. We're seeing interest in this particular product by things like fintech-focused hedge funds. People that would never have looked at Bitcoin, but hyperliquid fits alongside other types of fintech equities. Robinhood, Coinbase. These are other high-growth platforms, and hyperliquid can be analyzed alongside those types of stocks, even though it is a blockchain-based project and a token, not an equity. So it really speaks to the diversity of the crypto asset class. What do listeners need to know about hyperliquid? So this is a platform for finance with tons of innovation going on, but it specializes in perpetual futures, a type of derivative product that grew up in crypto but is now coming to mainstream finance. And a perpetual future is what it sounds like. It's a future with no expiration date, and that makes it a very attractive instrument for certain types of hedging and certain types of speculative trading activity. I think just getting started in traditional finance. I think you'll see these products become very popular. Hyperliquid really remarkably has taken off as a blockchain-based provider of this type of trading service. So there are centralized players like Binance, for example, that dominates this marketplace today, that are a traditional centralized exchange. Hyperliquid is providing the experience of a centralized exchange, but it's doing that with the transparency and custody model of a blockchain, which I find just incredibly surprising and impressive. And today, Hyperliquid is the third largest perpetual futures exchange in crypto by open interest. Among all exchanges, not just among traditional or decentralized exchanges, among all exchanges, it is today the third largest, and has begun to expand into non-crypto derivatives, things like oil, gold, international equities, and I think we'll continue to see tons of growth. So Grayscale research team has produced lots of material on Hyperliquid. If you want to go deeper, please check out research.grayscale.com, shameless plug, but for all our other material on Hyperliquid.
And I'll just add, the interesting thing to me here is in conversations that I've had with TradFi folks, they actually get Hyperliquid because this buyback mechanism where the more activity there is on the platform, the more fees generated going back to directly buying hype, it's like, again, the light bulb goes off and they get it. And there's been other examples, but to me, this is one of the first examples of a true DeFi platform really showing the long-term vision or the long-term value of crypto, and that translating over into something that, again, TradFi investors can understand. So I think there's a really neat story here. We're not going to go through all 35 Grayscale products, but besides HYPG, would there be another Grayscale ETF or other product that you would highlight?
Look, what I would like to say, Nate, is that keep it relatively straightforward, and consider the market cycle. So two things I wanted to say. One is, of course, we're in a bear market for crypto at the moment, and what that means is some of the core assets in our ecosystem that host innovative things like stablecoins, tokenized assets, and on-chain finance are trading at relatively compelling prices. So Ethereum, Solana, both available through ETFs through Grayscale. Investors can get access to this core technology at pretty compelling valuations. So you don't need to look terribly far afield to find great assets at compelling prices in the ETF structure. So, in the context of a bear market, keep it simple. Dollar cost average into the core assets and position yourself for the next bull market cycle. I think many investors will be grateful that they did that today. The other thing that I would mention is maybe if you want to take into account current market conditions, we're seeing a lot of interest in covered call strategies, Nate. These, as you know, benefit from more range-bound markets. If investors are confident that Bitcoin has found a floor, found a bottom in the current bear market, and I am increasingly confident that we have found that bottom. But if you don't think that Bitcoin is going to take off very quickly, covered call strategies can be an attractive way to monetize Bitcoin's volatility in a yield-generating instrument. And so we're also seeing a lot of interest in those types of products. And I think that that is probably the right trade in addition to some of these core assets in the current market environment. So kind of classic platforms that are powering the next generation of finance, Ethereum and Solana, Bitcoin covered call strategies, and maybe idiosyncratic ideas like Hyperliquid that are sort of their own unique opportunities. Those are the kind of things our clients are focused on today.
All right, with our remaining time, because you just mentioned the crypto bear market several times there, and it sounds like maybe you think we're closer to the bottom of that than obviously the top. What are you watching right now? Like, what's most on your radar that could turn things around? We've been in this environment for what, almost a year now? I think going back to around August, September of 2025. It's been a dark crypto winter, so to speak. What changes things?
Well, Nate, I'll stick my neck out and say I think Bitcoin's price probably bottomed at 58K. I've done markets analysis and investing for a long time, and I've been wrong before. But as of right now, I think we probably put in the lows. Look, one of the things I'm watching is just the price performance. I think is remarkable. We've had a tough stretch of news recently. We've talked about the Coldcard security issues, the Clarity Act, a piece of regulation moving its way through the Senate. The odds, the probabilities have been falling that thing is going to become law. And yet prices have been quite resilient. I think that tells me that the crypto asset class is oversold. The sellers have been washed out, and now we're just waiting for new buyers to enter the market. I think that that's the first step, finding a durable bottom. When price has a hard time going down on bad news or even goes up on bad news, that's a pretty clear sign of an oversold asset class, whether it's crypto or anything else. What are you supposed to look at over the horizon for positive catalysts? Look, I think focus on the core use cases of the asset class and focus on those issues. Bitcoin is a digital gold-like asset. It's a macro asset. It's driven by things like the debasement trade, the behavior of the Federal Reserve. Keep an eye on that. If we can price out Federal Reserve rate hikes, maybe we'll see some interest in these types of assets. I've been intrigued that gold has started moving again on the back, I think, of these themes. I think maybe not too long before that theme comes back to Bitcoin. And in the rest of the crypto asset class, just because Clarity Act may not happen doesn't mean we're not going to see tokenization continue, payments activity on stable coins continue. All of that stuff is going to move ahead. And so keep an eye on major tokenization projects. The DTCC is going to launch its initiative expected in October. I don't think we're going to see any let up on efforts to tokenize other types of securities. This could be a positive catalyst for the market as well. So I would characterize as finding an increasingly durable bottom, Sellers seem exhausted today, and we're just waiting on that new cohort of buyers to come in. And I think it could be any one of these things: interest in Bitcoin's features as a store of value, interest in the innovative on-chain finance features that are offered by Ethereum and Solana, or a number of other drivers.
I think you hit on just about everything that would be on my list as a primary driver. The one thing you didn't note that I'm curious to get your thoughts on, there's been a lot of discussion about whether the AI trade has sort of sucked the oxygen out of the room, and you've had people rotating out of crypto into the AI trade, or even companies like SpaceX that we saw IPO a couple of months ago. Do you think there's anything to that, and does that need to reverse at all, or is that just a narrative out there that maybe doesn't have as much substance to it?
Let me say two things. First, I absolutely think this is true. Crypto, whether it's Bitcoin or the broader crypto asset class, when an investor is making an allocation, they need to go through a due diligence process, and that takes time. We spend so much time on education for financial advisors, for institutional investors at Grayscale. That process takes time, and if their time is used up by other investments, then they have limited focus on digital assets. And I think that is an issue, that investors are very focused on AI at the moment. It's just holding back the due diligence process, especially for institutions that are very time limited. If they start to look at other ideas, I think some focus will return to digital assets. So it's holding back the due diligence process. That being said, we believe strongly that AI needs blockchain technology. So not only will the attention come back to our asset class, but these are two complementary technologies and complementary assets in a portfolio. Agentic commerce is going to happen extensively on blockchain rails in our views. Blockchains can provide a source of transparency and trustlessness that will be useful for AI agents. And blockchains can also be used to build decentralized alternatives to centralized control of AI. So not only, Nate, do I think that the attention is going to come back, but I think these are two pieces of technology that are going to grow together, and investors really are going to need both in their portfolios in the longer term.
All right, so the word I'm hearing moving forward regarding crypto is optimism. Is that fair?
100%. Look, long-run thinking and optimism is generally the way to win in markets, so that's what I'm sticking with.
Well, I love that. Zach, excellent perspective this week. I always enjoy our conversation, so thank you for the time, and thank you for joining me.
It's our pleasure, Nate. Thank you.
That was Zach Pandl, Head of Research at Grayscale. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next time.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.